Alrighty, traders. Good afternoon, good morning, good evening, and welcome to another AAA session here with the panel. Myself, Chris Pulver, and Tyson Clayton are ready to rock and roll and talk about the markets this week. What is moving the markets? We've got a lot of news coming out. We're going to be talking about the 3 rate decisions. Yes, not one. We've got 3 rate decisions this week. We got the Aussies, we got the Canadians, we got Eurozone, all coming up with rate decisions, clearly keeping them unchanged. We'll talk more about that. And also we're going to talk about the non-farm payroll. We don't have only jobs out in the US, but we have jobs out in Canada too, coming out on Friday. We're going to talk about that as well. We've got a lot of news, but then again, there's a lot of movement in the markets from a technical perspective that we're going to go ahead and connect the dots, talk about fundamentals, talk about technicals, connect them together, and find out trading opportunities, things that we're going to be focusing on this week. And I know that Chris and Tyson are both looking at Aussie, myself as well. Aussie crosses seems to be the highlight conversation around this week's trading. Now, without further ado, we've got 30 minutes to kill this out. Let's go ahead and talk about what is going on with the market. And I'm going to go ahead and introduce the panel right now. And we have Chris in the house. Chris, how you doing?
I'm doing well, Gary. Nice to be back.
Fantastic. And glad to have you back. And Tyson, how you doing, my friend?
I'm doing good. Good to be back. Excited to be here.
Good. Are you guys having a lot of sun out there? Because I'm killing it with the sun right now. I played golf this weekend, Saturday and Sunday. It is blazing hot right now.
Yesterday was about the nicest, hottest day, and it got up to like 75. So that's blazing hot for us.
Well, good. 75. That's crazy. It's been a real interesting week so far. We've seen a little bit of movement, actually quite a bit of movement coming out of the market already at the open on Sunday. And I know there's a lot to talk about. So let's go ahead and discuss exactly what is going on in the market right now. We've got news coming out that's going to obviously affect the market. Let's talk about the first news report that's going to be affecting the market. And that is going to be the Aussie rate decision. We've got the cash rate coming out on early morning, tomorrow morning at 1:30. But I don't think it's the rate that's going to make any change because we've got an unchanged rate. But I think it's a statement that's going to come out that's going to move the markets. What do you guys think?
Yeah, I was actually just thinking the same thing. Go ahead, Chris. But I was thinking the statements are the key. It's not the announcement itself. It's what they say within you got to read the words.
Yeah, the context will be there. So, look, you're going to have a really similar message coming from all central banks. We're not going to do anything with rates right now. There's a lot of uncertainty. The risks remain, headwinds and downward risks and all these things where it's like everyone is like, we had the central bank safety net. They're all willing to be accommodative. They're either increasing stimulus, they're keeping rates super low. But what was interesting is last Friday I was on the road listening to I just finished my weekly outlook and I listened to Jerome Powell. His little panel speech on Friday, and it was just a Bloomberg interview, but it's like he said some really amazing stuff with just like what the U.S., like what is really going to be the recovery for the U.S. And it just, look, this is a major central bank, the U.S. kind of leading the way and kind of being the trailblazer for where other central banks are going. So this week, what the Aussie says, or the RBA says, what the BOC says, what the ECB says. I mean, we have 3 rate decisions this week plus non-farm payroll. Like it's a lot of high impact, and none of them are expected to change rates. So it's like you said, Gary, not what the rate decision is, but what they say. It's going to be the press conference, it's going to be the statement, it's going to be what they're saying afterwards that really drive the market. So I would expect there to be a lot of noise in and around the actual news announcement, and then after maybe the first 15 minutes or maybe the last hour where things kind of move after the fact. So I'm looking for a lot of kind of breakout decisions with good volatility, but some breakout decisions on those rate decisions.
Yeah, I'm actually thinking, and you guys can comment on this as well, but I'm thinking that the news is going to come out, specifically the Aussie crosses, right? The news is going to come out on Tuesday morning. We've got also, don't forget about the GDP quarterly data coming out on Tuesday as well, but in the evening. So we're going to get some movement out of the market based on the early morning's news, or at least the rate statement. But then it's going to take us through until the evening because the GDP numbers have been coming out better than expected. Not great, but better than expected. That's also been pushing and driving, the Aussie bullish. And I'm thinking that it may take the whole of Tuesday for investors to digest the information and then start taking on positions and heading into Wednesday, Thursday, and into the weekend with maybe with a different attitude.
Yeah, I agree 100% with that. In fact, I think this is a classic buy the rumor, sell the news type of setup. I love this setup that we have. We have massive big pushes happening right before a really big week of fundamentals. A lot of times when we see that, it's a shift period. It's kind of the repositioning. Whoever, got to think about this. Whoever wanted to buy the Aussie has already bought the Aussie, and they're going to use any additional strength on this news that comes out. If it's good news or better than expected, they're going to use this as an opportunity to take profits. And so I think it lines up really nicely technically, and I think that fundamentally it's going to be playing right within our hands in what we're going to see in the charts.
Yeah, absolutely. So let's jump in. And while we're talking about the Aussies, let's go ahead and jump into all the Aussie crosses. We'll start off with the Euro Aussie. I know it's one of the pairs that a lot of focus have been focused on as well because of the fact that, let's go ahead and take a look over here at the chart. And if we take a look at the charts right here, you'll notice that we're right at the bottom of that upward trend line. What I've also noticed is we have an absolute awesome daily convergence sitting up on this right here. So you can see right here, price, and let me zoom in a little closer up so everyone can see this nicely. And so we've got price moving lower. You see how price is moving lower right here, which is fantastic. But yet the oscillator is still bullish. And so we haven't broken out of that 0% level right there yet. So it's not in the buy zone yet, but it's certainly trying to push there. And that's caused price to push down a little lower. This is my 2 cents, right? You guys may have some different opinions about this, but I'm thinking that the news coming out on Tuesday is going to create a bottom on the Aussie rally, the Aussie cross rallies that we've had. Aussie is going to recover, or not recover, but we're going to see a retracement move on Aussie crosses across the board. That's my 2 cents right here. So if I look at the Aussie, the Euro Aussie right here, I'm seeing now. Granted, I've got this channel line right here, and it's an inside channel line. We've still got a lot of room down here that price can move down to, but I'm going to expect a rally first before a dip. I could be wrong. We'll have to wait and see how that plays out. What do you guys think about that?
Yeah, I mean, I think real quick, go to a weekly chart, look at a weekly chart, and you see we are sitting at exact resistance. We're sitting at a breakout level. You zoom in pretty far, and look at all of 2018, 19, 20. And you just see we are right at that massive level of resistance. We broke aggressively above that. This is the first technical retouch of that level. The bulls are going to defend that area quite well. I don't necessarily think that we're going to get back up to obviously the highs that we put in early 2020 or this year, but we are for sure due for a nice retracement of this move down. And technically speaking, I think it's a brilliant area to start adding to or start committing to the long side.
I agree. I think it's funny as it's all like super fresh in my mind because I just finished up some of my morning videos. But there's a really nice range that goes on really from 2000, just like Tyson said, 2018, 19 into this year, 6,100 to like 6,500. And we're currently trading around 64. It's like, I think if we drift down to like 6,100, 6,000 being the nice round number, you got 6,000 to 6,400, which is a great range. I mean, so coming into what have we seen the last several years in April and May? April and May have established trends, whether they're the same direction or you see a trend in April become a trend in May. But these trends have taken us into the summer. It's in the end of May, that early June, you start to see some transitions. I mean, look, if this presses a little bit lower into 6,000, I have to be looking for buys only. But it's like I'm not going to fight current direction. Like if the Aussie wants to be the one currency pair on every single currency strength chart that's just stronger, hey, I'm not going to be the one to fight it and say that, hey, the Aussie's got to get weaker. I won't fight it until it's confirmed. So it's like for this pair, if it runs down to 6,000, great. Let's keep selling. Let's keep taking profits on it. But once we hit 6,000, then I'm starting to look at, okay, I've got to be a buyer. Like we've had, the one point, what's Euro Aussie 1.99 down to 1.60. If we hit, it's like it's a 3,800 pip move with virtually no pullbacks. Like, it's nuts, man. So, but I think if we look at, if we looked at the basket today, Gary, we could be flipping through charts on Aussie CAD, Aussie Swiss, Aussie Yen, Aussie New Zealand, Aussie Dollar, Euro Aussie, Pound Aussie. That's all 7 in the basket. That's all of them. They're all at levels where it's like, I would, if I was in the trade right now, objectively, I would not be buying the highs. I would not be selling the lows. That's just my thought. So for me to now say, hey, we've got to be, keep selling, it's like, I wouldn't be selling. I would be now waiting for confirmation to buy low, because that's the next best opportunity, in my opinion.
Yeah.
This reminds me of March, when I was starting to short the Aussie dollar, or I was starting to buy the Aussie dollar and Aussie pairs, and those that were patient and were able to sustain some of that drawdown got paid handsomely. It's reminding me of that same scenario where we've gone. I used the word a lot back then, and I'm going to continue to use the word right now. Too far, too fast. We are due for a pullback. Now, again, this pullback, this bounce may not take us, up huge, but it's going to be a decent sized bounce, and we may continue this downside move overall. But to look for a bounce back up to, towards this 170 level, I don't think is out of the question at all.
Yeah, and if you take a look at the chart right here and you see the pound Aussie, here's the pound Aussie look on the daily time frame right here. Same scenario. We're seeing a convergence level, prices moving lower, oscillators moving up. We should start seeing some sort of upside move. Now, I don't see any sort of major support holding off or helping and supporting this. So it's a little bit iffy, but I'll be honest with you guys. I am currently right now already starting to load in on the pound Aussie. I'm already starting to add some positions in on pound Aussie. I got active this morning already when I started seeing price take out those lows, because I'm like, man, this thing cannot go any further. There's got to be change. Now, I did speak about the rate decision as well as the GDP coming out this week, and I think Chris and Tyson both mentioned that profit taking may be on the horizon. If you are short on these pairs and you're taking profits, maybe time to start protecting those positions, especially going into the rate decision this week.
Yeah, and if you pull up the weekly chart on that pound Aussie again, let me go to the pound Aussie here. You see a similar on a weekly chart. You see a similar where we are near kind of a chunk of resistance back to 2018. That was a level right in this level was a very difficult area for price to break through. And then once it broke through, that's now become support. So this area in here, and it's a pretty wide range, but this area, between the 184 level and this 178 level, I think is going to provide a really nice. I don't think we're going to get down that far, but this is going to provide a pretty nice opportunity for people to step in on the long side. And again, look for that target. I think a target, Gary, for me, I think a bounce up to 193, 194 is very doable.
I mean, Tyson, I'd take a bounce back to 190 at this point.
Yeah,
I wouldn't mind just looking at big round numbers. Like, hey, we're at 184. Like, let's go to 190. Like that's tons of opportunity. Plus, one thing traders can note, Gary, you can highlight in your classes too. We have a fresh weekly target. We have fresh monthly targets. We have all these great critical levels, technical levels that just tend to be hit more often than not, high probabilities. So I see, whether or not it's this week with the news becomes a reason for profit taking, if it provides that last surge or it provides that, top or bottom to form for the corrections to happen. It's a really good alignment with we've had great trends in April, great trends in May. Now it's time to transition, start establishing those highs and lows, because I think summer trading, and we've debated this even collectively as a team, we've debated whether or not trend trading or summer trading is going to be slower, higher volatility. I think the most important thing I can do and help traders do is just be prepared for whatever happens. Like I said this, in stocks, I'm going to be extremely patient. I've cashed in on a lot of short-term positions the last couple of months. In Forex, I'm going to be the most active, and in crypto is going to be super patient. As cryptos to me as long-term, stocks are, we had an opportunity for short-term this year in March and April, but now it's like I'm waiting again for long-term levels to buy and dip from, especially when it comes to buying indices. And then Forex, I'm going to be active and always looking to find the right system and strategy to deploy. So, I've been so happy the last couple of weeks by not – I almost feel like my planning has been easier because I've let robots just trade the trends and trade the short-term alignments, and guess what? They haven't changed. Like we have the same alignments on the 1 hour chart, the 4 hour chart, the 30-minute chart, the 50-minute chart. Like every day, it's just like little dip and then boom in the same direction. So we've done a good job of not fighting, not calling tops and bottoms, And I mean, it's just been helping a ton. So it's more and more cementing that idea of like trade what you see, trade the confirmation, but just be on a small enough time frame that you can change if needed. So when we're talking about I would only be a buyer seller, well, you can set a robot up to buy confirmation only and not get, suckered into a bad trade. So there's a lot of great ways to be like super profitable right now. And I just want to stay with it. I just want to stay with it and let things keep flowing, man. It's awesome.
The thing that
great job, Chris.
The thing that I hear with all of that you're saying is the traders, and you're 100% right. The traders that are doing the best right now in this environment are ones that are not overthinking things. Mm-hmm. Just trade what you're seeing, and then establish a plan, set up an automation, set up a robot to just trade it in that direction. Just don't overthink it. That's the key.
I agree.
Yeah.
Yep.
That's exactly that. What eliminates confusion is simplifying. All right, simplify. It eliminates confusion. Once you start getting too involved with too much stuff, it just makes things a lot more complicated. And the markets haven't been complicated. Listen, if it's sideways, if it's not moving, if it's if it's range bound, it's range bound. There's nothing more than just seeing what you're seeing, right? And sometimes we look at this, and we go, well, there's got to be something more. There's got to be something different, and we try to do things, and that's where traders really start losing a lot of money when they try and change what they're looking at things, but they just don't believe what they see, and they try and complicate things and make it a little different. So. Hey, on your point there, Tyson, if you take a look over here, I pulled up the weekly here, and there's that low coming off that low right here, and you can see price on the pound Aussie is right there at 83.42. It's right there.
Now
testing that level right now.
Scroll back a little bit. This is so markets have a tendency to repeat themselves. So you look at that bullish run from the low, that bounce, and look at how it knifed through that. Back in 2016. Now that was Brexit.
True.
That was Brexit.
Yes.
But wait a minute. That's a little. That's almost a very similar structured high, and we're at that same level now. So it's either going to respond. I think we're going to get a volatility move higher, which I think we're going to. And again, remember the catalyst to that move was Brexit. So it's kind of one of those anomalies that is a little different. So I like the trade a lot. I would be a little bit aware of that knife through, but I think we're going to be good on this trade.
Yep. All right. Well, let's go ahead and pull up something else here. I'm going to go back to the daily right here, and let's go into the base pair, Aussie base pairs right here. Aussie New Zealand dollar. I know that Chris has got a lot of talk about the Aussie New Zealand dollar. I've got this range bound, Chris, and we are looking for it to midterm rally up to around about 1.13. But I must say, I'm still looking for a dip on this pair. I mean, it's been rallying for some time. It's due for a dip. Would you not agree?
I agree. So here's my take on the Aussie New Zealand. Traders know that I have been reluctant to short this. So here's my take. If I was going to short the Aussie New Zealand, I would have a stop around 108.75 or 109.00 and put a cap on that loss and look for this thing to drop towards like 105.50, 105.00. I am waiting. So after taking, a ton of positions on the Aussie New Zealand from 106 down to 1.00 and cashing in on like 4,000 pips of profit, I am waiting now to buy it again between 105 and 103. But at this current level, we're back up to retest the high. I think this is a great spot to test, but fail. So having very little risk to the upside with a decent, respectable move to the downside, this is a currency pair that typically either comes back. We have a beautiful monthly pivot around 105.30. We typically see this currency pair do 786 pullbacks. So if you're using Fibonacci sequences at 78% pullback, that pulls back into like the 103, 102.50 area. We're either going to have a shallow pullback, which I agree with Gary. We're still looking for a pullback. We either have a shallow pullback that allows us to run to 114, or we have a very deep pullback that goes into the symmetrical, like there's a 786, then it runs up to the 127, and that puts us back around like 110 to 111, and then we have another pullback and another wave. This could be like this long, drawn-out, very efficient 3-wave to 5-wave move where ultimately we do get to 114. What I don't want to do is I don't want to short this with a plan of I'm going to get it down to 105 and then hold short. The reality is that this thing wants to go to 113, 114 now, just like it did back in 2015. I'm not going to stand in the way of that, but I would not prefer to buy it now at 108. I mean, I've already taken a huge chunk of profit on it, which helped me a ton for March and April. And so I would like to sell it now, like 108 to 108.25, sell it at the highs, put a stop loss about 50 to 75 pips higher, and watch it fall. If it doesn't fall, then get out with a trade and lick your wounds and be done with it. But if it falls, you've got an easy reward to risk to the downside. And I would take profits around 105, and I would be ready to buy it again. So I'm still looking for the bigger position trade from 10500 to 10300. Buy it, take it up to 113, 114. I hope this currency pair cooperates. I really do. I want this currency pair to cooperate. Right now this week, it's an absence of New Zealand news, right? It's all about the Aussie. We have the rate decision with GDP news. By the way, we've seen the quarterly forecast for the Aussie have been pretty solid. They beat expectations. They've been anywhere from 4 to 5 tenths of 1% in the positive. And this is the first quarterly GDP forecast. They're expecting a contraction. This is negative 0.4% expected on Tuesday. So, and again, like, I'm wondering, I mean, the markets have shrugged off a lot of bad news, right? We've shrugged off terrible unemployment around the world. We've had Aussie news has been bad for employment. We've had U.S. news, Canada news, terrible unemployment news. This week with non-farm payroll, you're looking at like average earnings are terrible. Consumer spending was at an all-time low from Friday last week. Like the first time it was like a negative 13.6% drop in consumer spending. Meanwhile, because of stimulus checks that people are getting and unemployment plus the government stipend, you get more money in the U.S. now being unemployed than you were previously, but that runs out. Like those benefits are running out, I believe, the end of this month or going into July. So this whole thing about like the markets and the stock market's not a reflection of the economy, I can't agree more. And so it's like I have a hard time believing that the stock market's going to keep going up. I have a hard time believing that risk on currency pair is going to keep getting stronger. So I think that, Aussie, New Zealand is a great one to look at. Eliminate a lot of the noise, right? It's commodity versus commodity. It's a good technical pair. We have a new monthly target. We have new weekly targets. We have a reason for it to drop. And I think the news can be the difference maker. The RBA and the New Zealand the RBA news, the Aussie news without the New Zealand can allow this pair just to drop as it hopefully should from a technical standpoint. So I'm trying to keep it strictly technical and just kind of explain like there's no New Zealand news this week to kind of cloud the fundamentals.
Well, there you have it. Aussie New Zealand dollar 4-hour time frame. We look at the chart right here. We have a cipher pattern setting up right here. We have the weekly, the monthly target that Chris mentioned right down here. We're in an extreme overbought condition right here, so things are going to start turning around. And I'm still saying it, guys. Aussie data coming out on Tuesday. The rate decision, the statement, and then of course GDP. That's going to set the pace for, or at least the directional bias for the Aussie in the short term, and correction is due. So I think profit taking is a smart idea.
So for me, real fast in this one, it's very simple. I agree 100%, and this is the way I'd play it. I would look at today's low as my confirmation that May high is going to hold. I would short on a break below today's low. I would target 105. I actually think 105 is a nice target. I'd put a stop above May's high at 108.35 or so. And if we break above 108.35, then I think we have a pretty clean shot to 110. So I'd actually maybe do a stop and reverse up to 110.
I like that plan, Tyson. That's clean,
Yep.
man. I like that.
Yep, absolutely. Hey, let's just move on to we've got the jobs coming out this week for the US. Obviously, the numbers are going to go ahead and report negative. There's no doubt we're not going to see positive report. But it could be better than what they expect, right? So it could be the expectation could be low. The expectation is low, but yet the numbers come out, the actual numbers come out better than expected. Let's talk about dollar index because I know, Tyson, you're looking at Aussie US dollar, right? And so Aussie US dollar not only is going to be affected by, of course, the rate decision coming out for the Aussies tomorrow, but then, of course, we've got the jobs coming out on Friday. Let's take a look at the chart and walk us through your thought on this.
So I am medium term, I'd say, bullish the dollar. I don't necessarily want to take a big stance on a dollar position, for the longer term. I'm a long-term bull on the dollar, but as of right now, there's some bearish things and bullish things. But however, saying that, let's wrap this back to the Aussie. For me, it's obvious that the Aussie is extremely overbought. The dollar is getting to a point of being oversold. And I think there's going to be, whether the data comes in bullish or bearish, I think there's going to be a lot of profit taking in a trade like this. So I like the short at or around these levels right here. If I wanted to be really strict on this, there is a gap towards this 68.24 level. So we could push up another 50, 60 pips before, we really start to see an acceleration to the downside. However, just to really make this very simple for traders out there, I think anywhere between 67.50 and 70, it's a brilliant, and I don't even think we're going to get up to 70. I'd say 60, but I'll say 70 just to kind of keep it clean. That 250 pip range all the way down to 63 is my sell zone. Basically, I want to be a seller from here all the way up to 70, and I want to continue to look for opportunities to sell all the way back down to 63. Now, there's going to be many opportunities to get in short, take profits, get back in at a high price, get in short again, and ride the waves down. Continue to ride the waves. Don't just get in short once and targets. So I don't want to trade this like, hey, I'm going to sell now, target 63, stop at 70. What I'd rather do is let's look for opportunities to get short now, ultimate target 63, and let's have a kind of a stop area of 70. And then let's look to take profits when we get to downside flushes, take profits, look for those high prices to sell again, and continue to do that all the way down to 63. And we might be able to turn this, instead of making 450 pips in this trade, we might be able to make 1,000 pips or 1,500 pips if we ride the waves right.
So let me put what Tyson said and what Chris said all into one. Basically, it's like, if you look at the chart right here, and I'm going to take a look at the charts for the moment right now. If you take a look at the charts, we're coming up to resistance. Don't just go ahead and say, I'm selling at resistance, but wait for confirmation using pattern formation, using candlestick formation, using an automated EA that Chris spoke about that is called Right Trade Max, or any other automated system that is a trend-based system, and say, hey, when price starts moving into what we call in our sell zone based on that EA logic, then go ahead and deploy sell only and trade it in the direction that Tyson just mentioned, targeting those levels because a correction is due. Now check out the chart. This is we're looking at a daily chart right here, and on the daily chart, this is the resistance coming off that previous major low right here. It's all the way here at 68.20. When price gets to that level, there's going to be some sort of either a breakout or rejected. Price is either going to be rejected by that level or it's going to break through that level. You've got to wait for the confirmation. That's your directional bias. Listen, if you want to follow any simple way to trade the market, trade support and resistance. When market breaks through it, confirms it, trade it. If it rejects off those levels, if price is rejected off those levels, then wait for the confirmation and trade it. Any sort of indecision candle at resistance or support is a confirmation that that level is holding and rejecting price. So this is what we're looking at right here in Aussie US dollar. Now, if I go to dollar index and take a quick look at dollar index, you see dollar index is moving in the opposite direction, bearish right here, and it's coming back down to support. So when it comes back down to support, we may start seeing a turnaround in Aussie US dollar. But right now, dollar index is moving south and is heading bearish. Any thoughts on the news coming up on Friday, guys? Jobs coming up on Friday. We know the numbers are going to come out bad. How do you think this is going to be? How do you think this is going to affect the markets? Because we haven't really seen non-farm payroll really being a perfect point for market turns for the week.
Tyson, go ahead. My camera just dropped.
Yeah, I think I'm not sure. I'm obviously the world knows it's going to be bad. It's going to be bad. That's just the bottom line. What I'm more interested in is, I think there's going to be a lot. I think it's going to be a reversal. I think that's what's going to happen. I think it's going to be a confirmation of what everybody's assumed bias is going to be. And right now they're kind of buying in hope, and then I think the reality is going to kick us on Friday, and it's going to say, wow, wait a minute, we did think it was going to be bad. This is actually confirming that bad. Okay, things are pretty bad. Let's start to take profits in our stocks. Let's start to kind of reverse some of these positions. So I actually think it's going to be a start of a little bit of a turning point, or at least a start of a retracement like we've been talking about. And then the data is really going to have to prove itself. Are we going to then start to see in June and July, start to see real ticks up in the data, real economic, recovery? And if we don't, we could test some of these lows again. If we do, then we will resume this upward push. But I think it's going to be kind of a reversal of what we've seen over the last few weeks, and then a settling out, and then the data will have to prove itself to continue, either prove itself to continue the uptrends or disprove itself, and we maybe go and retest those March lows.
Yeah. Chris, any thoughts?
Yeah, in fact, somebody just asked about the dollar index. There's a daily pocket. There's two spots I'm looking at for dollar index with the news this week. I think right now the trajectory is bearish on the dollar index. So, the pairs that have been correlating nicely. I mean, look at the euro dollar, right? We've been waiting for the euro dollar to get out of the range from 108 to 110. We finally broke and creeped out above 110, drifted up to 111 and change. If we remain above 110, I'm a buyer on the euro dollar. I mean, again, you can put stop losses below 110. You can target the March high at 114, 115. But dollar right now, like DXY dollar index, looks bearish until we hit some of those V bottoms. I mean, we have a pocket around 12,320. We have lows around 12,150 on the dollar index. I mean, those are great spots for the short term to be like really stepping on the dollar for right now. But I do think that, it may be faster. But now that the dollar and the Fed have cut rates, I don't know if there's quite the incentive of like, hey, let's make the dollar weakness very fast, because now the Fed is at 0 to 0.25%. So, before, when the Fed was at a percent or higher, it's like the dollar had to get crushed really quickly because nobody wanted to hold against it. So I do think as we head into summer trading, like, I think this is a good way to see the dollar sustain this current downtrend, to see some bearishness. And I mean, non-farm, it's like Tyson said, it's like people know it's not going to be good. There's no job numbers anywhere in the world right now that are going to be good. We're still probably 2 to 3 months away from, like, look at New York as an example, right? New York is trying to, as of June 8th, they're trying to get back to reopenings and what's considered essential, non-essential, who can open curbside pickup for restaurants or whatever it is. All these things are happening right now with different protocols and policies. But the next couple of months, like, when the benefits run out for stimulus checks and the benefits run out for actually making more money to stay at home, now it's a matter of seeing who's going back to work. Does the unemployment drop, or do we have continued claims dropping? Do we have unemployment rates going down? And average spending. I mean, consumer spending last week was a big point to say that people are staying home, not spending money and making more money. For the first time in a long time, like, the U.S. is never seen as a saving nation, right? We're like, we love debt, we love spending, and that's what we've kind of based our economy on. What's a healthy sign of our economy is people are spending money. Whether they do it responsibly or not is another conversation.
True.
But I think we won't really know, if we're in a better sign or we're getting back to like a healthy economy, probably for another couple of months. So, I think the news right now, it's like we know it's going to be bad. That's my point. Like, we know the news is going to be bad, whether it's priced in or not. Like, this could be a thing that's pricing in. I mean, we're pricing in we're pricing in unemployment numbers that are going to be bad on Friday. We're pricing in possibly the U.S.-China trade war tensions escalating. I mean, heck, we might even be pricing in all the civil unrest that's going on in the U.S. right now. I mean, the George Floyd thing is creating a ton of uncertainty, a ton of political unrest and civil unrest. This is all bad. Like, this is all a bad storm that's brewing, and it's just a lot of noise that we as traders have to sift through. So again, we have these conversations, we get onto these like tangents of fundamentals and this and this and this. At the end of the day, we just have to be technical traders. We have to make good sound decisions with our capital, our equity management, and our trading decisions. And I know that we've had situations that have set up before, like Tyson, you've been adamant about buying the Aussie dollar, and you said it all through March. Yep. And it paid out a ton, right? When it was all said and done, like, it paid a ton. I was buying the Aussie New Zealand since December of last year. It paid out a ton, but I had to tell myself to stay in that trade. I'm trying to get away from that phase of like, I have to tell myself to stay in the trade, as opposed to now it's like, hey, I'll take the current direction and I'll stay with it and I'll ride it as long as I can. I'll deal with the transitions and maybe some small losses, and I'll use good equity management and sound decisions to just stay with what the market's going to give us. So I don't know. I mean, my plan right now is to say short term, I think this is going to be a really important week for traders to take away from this session today. Profit taking this week, protecting your profits if you got them. If you had continuations from last week to this week and nothing has changed directionally, move your stop losses, trap your profits. There's no reason to let 50 pips of profit, 100 plus pips of profit turn into break even. There's no reason for that. Like, move a stop loss, have something to walk away with, and then you can reaffresh, or you can reassess and reevaluate the strategy and the technicals and take better trades.
I think what's important to note is that there's always going to be more trades. All right, the market's never not going to give us trading opportunities. So if you're in the money and you've got a bunch of fundamentals coming out like we have this week, that is going to create some uncertainty as to where the market's going to go, then maybe it's time to start cashing out. Or if you're looking at this saying, hey, well, we're at top resistance, we're at top support, maybe at this point in time we need to start thinking about taking profits, let the market decide whether it's breaking through or rejecting that level, and then trade the signal after that. So it's like anytime you come to a roadblock, right? It's time to start thinking: are we going to go ahead and go through this, or are we going to go ahead and take a detour around the roadblock and figure out what we want to do from that point onwards? These levels of support and resistance are roadblocks in the market, and we got to make decisions. Are we going to stick it through and trade it through that level, or are we going to go ahead and take our profits, get out of the trade, look for the markets to make a decision on, and then go ahead and follow through on that? So great week for those trading decisions, and good point you pointed out there, Chris. So that's great. Hey guys, I want to jump to a Swiss CAD. I know we have the Canadian rate decision coming out this week. Unchanged numbers is expected. It's going to come also down to the statement. But we also got jobs coming out for the Canadians as well on Friday. And if we take a look at the Canadian Swiss, and Denise actually pointed out right here, what do we think about the Canadian Swiss? And if you look at the Canadian Swiss right here, we've been inside consolidation for some time. And we've been bouncing off the support right here. And finally, we're starting to see a break of that gap that we saw back in March. The market's gone ahead and broken through that. We traded above that level. It's on its way up, man. And if we're going to see oil prices slipping above $36 a barrel back to 42 and then higher, this could give us a good upside move in the CAD Swiss franc rally.
Yeah, I listen. I agree. I think as much as I look at the CAD Swiss and I say, man, this is my opinion is this is not going to go up long. I don't see any clear short for me. I don't see any clear selling opportunity until we get towards the 72 level. For me, I'm kind of stepping on the sidelines and saying 72 in this 72 area. There's some interesting price action around that area, and we're going to struggle around there. The bulls will struggle around there, but until then, I think we keep pushing up. Yeah.
So, I mean, I would not like to have this conversation now at 70.70 on the CAD Swiss, because I've been long since 6,800. So now it's like we're looking at, hey, we should be protecting profits this week. I said 7,100 to 7,140. That's been my pocket window. Last week we hit like 70.25, 70.30, dropped all the way back down below 7,000. Buy it again. 7,100. That to me is like, if you're long at all on CAD Swiss, that to me is a safe level to be protecting profit. Look, oil, if we drift, we're at $35 right now in U.S. oil. If we go up to $40, are we going to hit $45, or are we going to drop back down to $30? I mean, that break in price between that weekend that Russia, OPEC had their big falling out and price gap plus coronavirus, that's a huge gap in oil. Now, I think us getting back to there is a great, I mean, that's a testament to the overall technicals of the market. But getting back there also gives a reason for all of this profit taking to also take place. Yeah. I mean, if you've been long, oil futures really hasn't budged a lot, but it's like U.S. oil and I mean, dude, I'm still stuck in USO and UCO. It's like those really haven't done me any favors because of the decay and the fact that they're not priced the same way because they're based on futures contracts. So, I'm getting back towards break even on those because I think it was like I don't know. It might have been a 10-to-1 split, to be honest. We might have had a 10-to-1 split on both UCO and USO. So I bought single digits like $2 and $6, and I mean, they were repriced and it's a mess. But oil back to $40, like if I was long from $0 with the May futures contracts on U.S. oil, and I now have profit at $35 to $40, I'm probably taking profit. I don't know if I'd want to hang on to oil long. So same thing on CAD Swiss. I think we have a safe level to get to 7,100. Look for some profit taking. Look, if it comes back down to 6,700, I'll buy it again. But it's like, I'm not going to short it at 71. I'm not going to buy it at 70.70. I'm going to wait and take all my profit now. And if it comes back down to those lows again, which were 20-year plus lows, I'll buy it again. But just like you said, Gary, there are other trades. CAD Swiss, it's fine, but I don't need to be, that's not my sole purpose for this week. Like, that's a profit taking currency pair. I want to go find a trade elsewhere. But on that note, EuroCAD to the downside, if you're short EuroCAD, 1.50 is a great spot to be short and protecting profit on EuroCAD, 1.50.
Yep, absolutely. All right, guys, we're going to wrap it up here. And I think a lot of the conversation we had right here, I think it's good information to lead the students into this week. And also, very important, I think, highlighting the fundamentals this week. I think it's going to be critical points in the week that's going to drive and change the directional bias on a lot of currency pairs. You've heard the guys speaking about the Aussie crosses. Heard them saying, hey, possibly looking for some correction move in the Aussie crosses. Could the data tomorrow reflect the retracement or correction that we need in the Aussie crosses? Because we're seeing very strong rally. In fact, when I see any opening week with a strong move on a currency pair, I'm expecting some data coming out. And so this is almost like the markets are reacting according to what's coming out, and they are going to see the opposite move to what the markets have currently started off this week. And I think that's what's happening right here. We've seen a nice little move, a stronger move in Aussie over the last 12 hours, actually last 24 hours. No, it can't be 24 hours, it's only last 12 hours. So we've seen a nice movement over the last 12 hours. But could the data change? That's going to be on Tuesday. Don't forget, write that down. Tuesday, data coming out for the Aussie. We've got rate decision, and we've got GDP coming out in the evening at 9:30 Eastern Standard Time. Wednesday, we've got Canadian data coming out. Well, not data, but we've got the rate decision and the statement coming out on Wednesday. Check out the Canadians and see how the markets are moving. Take a look at oil. What Chris said was absolutely correct. Could we see a price rejecting the level of $42 a barrel, because that's the gap that needs to be filled? $42. When it gets there, it's either going to blow through or reject off that level. My 2 cents, just like Chris says, I think it's going to hit that level and reject off that level. And I think Tyson may be on the same page with that. Yep. Tyson, you right? Same page on that?
Yep.
Rejection on 42?
Yep. Absolutely. We've been on that level for, it's been I think a month and a half now. We've been saying rally up to those levels.
Mm-hmm.
Great. And then we've got Thursday, we've got ECB. I haven't seen a lot of big movements out of the European zone when we get ECB rate decision, and it's 0% interest. Again, everything's going to come down to the statement. I don't think they've got a lot of leverage to be able to move the market around, but they're at 0% interest. They're not going to change the rate. They're going to keep it unchanged. I don't think we're going to see any sort of big move in that. We'll keep an eye on that, because I do see that Euro New Zealand dollar has been moving rapidly, but that also could be the strength that's coming out with the commodity pairs, or at least for Aussie and New Zealand, over the last 12 hours. So we'll check out that on Thursday. But then Friday, of course, non-farm payroll for both, non-farm payroll for the US, but we've also got jobs coming out for the Canadians as well on Friday. A lot of chat about, a lot of talk about, to talk about, and only way to find this information and get details of this information throughout the week will be getting connected with everyone, or at least getting connected with the instructors in their trading rooms. Chris has got his trading rooms on Tuesday, Wednesday, and Thursday. I have my trading rooms on Tuesday, Wednesday, and Thursday. Tyson has his trading room on Friday. These are the conversations we're going to have throughout the week. Guys, get connected. If you haven't been connected yet, connect with the instructors in the trading rooms, because these are the conversations we're going to be talking about day in, day out throughout Tuesday, Wednesday, and Thursday. Now, also remember that we do hold these sessions every week. Come up with questions if you have any questions about the market. We certainly will be addressing those questions in these sessions. I also want to add this as well, all right? And this is vitally important. If you're not a subscriber of this channel, subscribe to this channel right now. Go ahead and smash the like button, all right? The information you received today was awesome. If you loved it, smash the like button, and we'll see everyone back again next week, same time at 1 p.m. Eastern Standard Time. Well, from myself and from Chris and Tyson, we appreciate you guys coming in. Thanks for joining us. Hopefully you enjoyed the information, and we'll see you next time. Thank you.
Yes.